This is Donald Deeser with Gold Standard Asset Management in Los Angeles, California. I've been in the real estate management business for about 25 years now, and I'm here to talk a little bit about how do you select a property in Los Angeles. First thing to know is it's all in the numbers. You need to know the numbers. You need to know what your target investment is, how much you want to invest, and what return you want to get for that investment. Next thing is the old adage, location, location, location. You need to make sure that the property you're looking at are in prime locations for the asset class you're looking for. You want to make sure that apartment buildings are on main thoroughfares so that you can get good signage so people can see it, and that will increase your occupancy. The other thing you need to look at is the yield. You want to make sure you have a good yield on the property you're looking at compared to the market yields. Today in Los Angeles they range anywhere from 3% to 8%, depending on whether it's a Class A or a Class C. So whichever class you're looking to buy into, you need to make sure that you've got the best yield for that class. The other thing you need to know about the location is the vacancy. What is the market vacancy? The value of real estate is based on the cash flow you get. So if you're in an area that has 30% vacancy, you're going to have 30% less revenue. So you need to make sure that the area you're in has high vacancies. And then a good way of looking at assets is to have an apartment with low occupancy and a high vacancy area so that you have upward potential on your investment. Next thing is potential growth. Again, the most important thing is how much you're going to make on these assets. So you need to be in an area where people can afford the rents. And for example, Los Angeles is a perfect place because it's got great economic opportunities and an engine for growth. So you're always going to have increasing rents in a city like Los Angeles or San Francisco or primary markets. The next thing you need to look at is low maintenance. When you're looking at potential projects, you want to take a good look at the maintenance cost and see what you can do to reduce those costs and see if they are reducible at all. Again, the bottom line is the most important part of this property management business. And the final thing is you need to make sure that the asset is a good fit for your strategy, whether it's capital preservation, cash flow, you name it. It's your assets. You need to determine what your strategy is, and a good property management company will help you fulfill that strategy. Thank you. This is Donald Deeser with Gold Standard Asset Management.